Do you want to stop leaving your money in the bank, watching it lose value year after year? Then the very first step before you start investing is building the right mindset. In this video, I'll show you why your way of thinking determines your success in investing, and how you can develop it step by step. Stay tuned until the end to find out how successful investors really think. Why do people invest in the first place? The reasons are many, but a central one is to preserve the value of their wealth. Our money, the euro, like any other fiat currency, loses purchasing power over time. This is called inflation. It makes goods and services more expensive on average. If you have 100 euros today, you can buy a certain amount of goods. 10 years from now, the same amount might cost 120 or even 150 euros. If your money just sits in a bank account with little to no interest, you're effectively losing purchasing power year after year, silently but steadily. But investing is not only about preservation. It's also about growth and securing your future. It means letting your money work for you. Thanks to the power of compound interest, even a small starting amount can grow significantly over time. Albert Einstein is said to have called it the eighth wonder of the world because it enables exponential growth. Profits generate new profits, which in turn generate even more returns. Over the long term, this can create wealth that gives you more independence, security, and freedom, whether for retirement, buying a home, or simply enjoying more choices in life. In this context, the right mindset is the foundation of every investment. Many people think investing is mostly about knowledge. If I just find the right stocks or ETFs, I'll be successful. But the truth is, the most important factor is your mindset. Your thinking, your emotions, and your overall attitude determine how you react to market fluctuations, how long you stay invested, and whether you follow through on your strategy. A healthy investor mindset is built on several pillars. The three most important are long-term thinking, risk awareness and acceptance, as well as continuous learning and self-discipline. So first of all, long-term thinking. Investing is a marathon, not a sprint. Many beginners fail because they think too short-term. They buy when markets are high out of excitement and sell in panic when markets drop. The most successful investors, from Warren Buffett to long-term private investors, share one thing: patience. Historical data shows that markets can fluctuate sharply in the short term, but over long periods they tend to rise. If you invest with a time horizon of 5, 10, or even 20 years, you can view short-term setbacks much more calmly. Additionally, you need risk awareness and acceptance. Every investment carries risk, and that's perfectly normal. There is no completely risk-free investment. Even government bonds can become unsafe in rare circumstances. The right mindset does not mean avoiding risks, but understanding and managing them. One key tool for this is diversification, spreading your money across different asset classes, sectors, and regions. This way, one single failure won't sink your entire portfolio. At the same time, you must accept that losses are part of the process. No successful investor became wealthy without setbacks, but the art is staying rational when they occur, rather than reacting emotionally. Lastly, I want to mention continuous learning and self-discipline. Investing is not a one-time event. It's an ongoing process. Markets evolve, technologies change, and your own goals may shift. A good mindset means being open to learning while sticking to your strategy. Stay curious, keep educating yourself, adapt your plan if necessary, but don't get swept away by short-lived hypes or trends. Discipline is key. It ensures that you don't pause your savings plan when markets fall, and that you don't sell too early just because things are going well. So how do you develop this mindset? A strong mindset doesn't appear overnight. It is shaped by knowledge, experience, and reflection. Here are a few practical steps. Financial education is the foundation. The more you understand, the less you'll be driven by emotions. Read books about investing basics, watch credible educational videos, or listen to podcasts that explain complex topics in simple terms. Start small, but start. Waiting for the perfect moment rarely works. Begin with small amounts you can afford to lose. This lets you gain experience without major financial risks. Set clear goals. Are you investing for retirement, for a home, or simply to build wealth over the long term and gain more freedom? Clear goals help you craft a strategy and stay motivated. Write down your plan. A written plan protects you from impulsive decisions and gives you direction when markets get turbulent. Manage your emotions. Panic and greed are the investor's worst enemies. When markets fall, remember, volatility is normal. And when everyone is euphorically buying, ask yourself, is this still rational? Let's take a look at the real world. Imagine you invested in early 2020, just before the COVID-19 crash. Within weeks, many markets fell by over 30%. Many investors sold in panic, locking in their losses. Those who stayed calm, stuck to their plan, or even bought more, are now likely well in profit. This example shows your mindset determines whether you emerge from crises stronger or weaker. Another example. Think of the dot-com bubble around the year 2000. Many blindly invested in internet companies simply because everyone else did. When the bubble burst, they lost heavily. Those who invested wisely, diversified, and held onto solid businesses eventually came out ahead. You see, investing doesn't start with picking the hottest stock or the perfect ETF. It starts with your mindset. If you learn to think long-term, accept risks, and stay disciplined, you're already a step ahead of most. In the next video of this series, we'll explore the basic types of investments you can use to reach your goals. If you don't want to miss it, subscribe now and stay tuned.